Friends, friends, we will now consider some provisions which are applicable for the cooperative banks in Banking Regulation Act. The Regulation Act has been devised to give the power to the Bank of India to control the entire the monetary system and the banking system of the India. It is after independence it is felt that the central government must have its own bank to transact all the financial and monetary transactions under the control of one roof. So the Reserve Bank has been formed and, and the act has been devised under the Banking Regulation Act, which gives immense power to the RBI, and that is also applicable to the cooperative bank, nationalized bank, any financial institute also covered under that. But instead of having the deliberate discussions on entire BR Act, we will consider in nutshell some provisions which are applicable to the cooperative bank. Primary object. What is the cooperative bank? Cooperative bank must have the primary object of the banking business. What is banking business? Banking business is the accept the deposit for lending. That is the simplest definition of banking. And for that, various services are engaged while doing that business. So, under the roof of the banking business, there are service industry also, then banking industry also. The banking industry can carry the main object is accepting the deposit and payability is on demand with earning through lending that money. So it is money of the customers has been used as a raw material. This is the simplest definition of the banking. Now the cooperative bank can be started under the minimum share capital is of 1 lakh of rupees. For starting the banking business, one has to approach the RBI and sought the permission or rather than license to transact the business. So any individual, body of individuals or company can apply for that licenses. If RBI deems fit that it is the proper case, then that issues the license to the bank, and then only the bank will commence its business. The main thing is that when the cooperative bank has been formed, it can be formed through shares only, and another cooperative bank should not be the member in that particular cooperative bank. So if A is the cooperative bank formed and the shares has been issued, then the B cooperative bank, which can't purchase a, not a single share in that A of cooperative bank. That is the main condition of that yield. Otherwise, earlier we have seen in cooperative act that any cooperative can become the member of the other cooperative society. Means any legal person can become a member in other cooperative society, but that principle is not followed in the banking industry. The banking industry is, and other some industries are exception to that. Then the license to whom awarded it as a banking, that is the cooperative bank, has been awarded license as a cooperative bank. Then it can't undertake the business other than banking. So hire purchase and equipment leasing and insurance business, the cooperative bank can't take this business. Now there should not be any misconception in these three terms. I Because you will observe that you are financing the vehicles under the hire purchase scheme. You are there are some banks, or you may be your bank. There may be customer. You have finance for the leasing of equipment, and insurance business. So the main object is that bank as a whole cannot transact this business under hire purchasing, equipment leasing or insurance business. That means bank should not purchase any vehicles to give a finance under the hire purchase scheme. In hire purchase scheme, the ownership of that vehicle should be with the customer, not with the bank. Then same in case of equipment leasing. Bank can't purchase the equipment and then give it to the rent. That is leasing is the on payment of rent. That is the we say that a rent agreement or lease agreement. The same as insurance business. Bank cannot own the insurance company and transact business under the banks through the bank branches for the insurance. So these are the basic point that bank can give finance to the customer under hire purchase scheme. Bank can give a finance to the customer who purchase capital goods of leasing equipment and lease it to the some other persons. It can be done, but their ownership is lies with customer only. There may be your charge as a security of charges of mortgage or pledge or hypothecation or like anything, but that is your charge. The original ownership is with customer only. Then we'll go further. Bank cannot undertake any trading activity. Mean bank can finance for the trading activity, but as a whole, bank cannot undertake trading activity. Means purchasing in his name and selling, that cannot be done. But bank can finance to a customer who purchase the commodity and and sell it. That is the trading activity. It may be share or anything goods. But that trading activity, the ownership should be lies with the customer, not with the bank. The bank cannot take any immovable property as a security or in his own name for more than 7 years. If it is, then it should be obtained that bank should obtain the RBI permission for doing so. But bank can, for its own use, can purchase immovable property, and there are some restriction also. So if you have the money, then you cannot purchase the immovable property like that. There is a boom in real estate. So bank by though it is in profit, bank cannot purchase the immovable property unless and until it can be used for the banks only. So for bank, for his offices, branches, bank can purchase immovable property. There are also some restrictions in purchasing the immovable property. The immovable property purchased in a year should not exceed the 1.5% of the capital. That is there is a cap. So there are restrictions by the RBI on purchasing and each and every activity of the bank that we'll see in future nature. The bank, the cooperative bank, has to put up a 3% cash reserve ratio with a state cooperative bank or RBI. Each and every bank should keep in reporting Friday, that are the two Friday, the 3% of their demand and term liabilities with state cooperative bank or with RBI. And if there is any shortfall in maintaining that CSR, then there is a penalty to it. So there is a meticulous calculation for maintaining CRR. Actually, the BR Act is mostly applicable or uh, used for the higher category of officers in your bank. So, at a branch level or at a say regional level, it has less impact. But at the central office, all are keeping an eye on the provisions of Banking Regulation Act and does the activity. Because if there is any lapses, even the reporting of KYC, there is a heavy penalty, and you read this information in the newspaper and all these things, or even on TV news, social media, and all this. This bank has been penalized, that State Bank is penalized, Bank of Baroda penalized, IDBI penalized, ICICI penalized. So, there is any violation of any clause, there are the penalties. Then, in banking business, what banking business is there? To sanction the loan on the security. That is the one business. But bank cannot sanction or advance any loan against own shares. That is the main condition. Then RBI is empowered to determine the policy in respect of then there are the bracket generally and particularly. What it is meaning? It means that RBI is empowered to determine the all policies in respect of all banks, all cooperative sector banks. And particularly means RBI empower to determine or give policy direction to a particular bank also. How we will see in the next year. Purpose. The RBI give direction to determine the policy and how the loan, the advances should be sanctioned for purpose wise. The what purpose the advance should be granted by the banks. Then how the margin to be maintained in respect of the secured advance. How much unsecured advance can be sanctioned. There is a also cap. Then to whom the exposure to one party, a single party advance, how much percentage to be given. Then general exposure to the single person and the group of the party, how much it is there. There are directives, and RBI is publishing the directives on 1st July of every year. Then how much interest to be charged and other terms and conditions that should be incorporated in your loan policy. And any violation of this act, it have the impact of the penalties, and in some cases the withdrawal of the license also. So we'll see the purpose. You have the money, but to import the gold and sell it, import the goods. If RBI finds that these activities should not be undertaken by this bank, or that then they will give the specific direction to the cooperative bank as a whole or a particular one also, or advance to the builders. Advance to the builder, there are purpose. RBI can ban considering the health of particular bank or size of the bank. RBI may give directive to stop the finance to that sector. Then there are some highly volatile sectors. Uh, you you may say that the share trading, RBI can direct the restriction on this count also. Then there are the specific guidelines. You have the security, you have the integrity of that person, you have got very good relation of a particular customer of the bank, but your capital is say 100 rupees. Then even though the customer is ready to pay you the 20% interest, you are not allowed to sanction him more than 15%. 15% is the general cap that represents whatever is the your share capital and reserves. You cannot finance more than 15% to a single party of the group of the party. Then you will find that there are some ceiling in even sanctioning the housing loan also. These ceilings are uh, nowadays these ceilings are increasing, but that is not fixed. That is say earlier it was a cooperative bank can allowed I think up to 25 lakhs. Now it has been reached to the some 70 lakhs. So these restrictions imposed by RBI considering that exposure of the party, that is the RBI study the market and general health and gives the direction. Then also if you have got the guarantee is also one of the important business which earn sizable commission in the bank. So and guarantee is may turn into financial advance. That is, if you have given the guarantee and paid the that third party that amount has given that our customer does not perform the activity or promises, then bank has to pay because he has to given the guarantee. Then that the paper guarantee has been converted into actual funding. Actual guarantee is the non-funding business, but it can be converted into funding business. So there are the limits of the exposure of giving guarantee to the single party of the group of the party. Then otherwise the what will be the rate of interest, what will be the other terms and conditions of the sanction is also directed by the RBI, and each and every bank has to follow it. Earlier told that we have to obtain the license from the cooperative bank, that is under section 22. RBI is giving power to give licenses to the group of persons to carry out the banking business. It may be cooperative or private or any type in banking business in all over India. Then other is direct. We have already seen that the 3% cash reserve ratio has to be maintained. Same way, under section 24, consider the bank, every bank has to deposit as a statutory liquidity ratio. which is not less than 25 and not more than 40% of their last fortnight demand and term liabilities in the unencumbered securities at the close of the business. This SLR is normally maintained in the form of the security, the infrastructure bond, RBI bond, all that. It is not generally it is not maintained in the cash account. Only the cash reserve ratio is maintained in the cash. Other is in the securities form, but bank has to maintain. Everybody has to maintain this on the last fortnight demand and term liabilities, and that is the mandatory. And it every RBI announces every 6 months their monetary policy, considering the liquidity of in the market. Then you can say the financial positions in the markets or funds with the society. They, they then price increases, deflation, inflations in the market. That this rate is varied, means increase if RBI feels that the liquidity in the market should be more, then it reduces the SLR. If RBI feels then the liquidity is that we should curb that liquidity in the market, so it reduces. So it is the fluctuating rate, and it is declared on every 6 months. Then in RBI under section 35, RBI has power to inspect each and every book of all banks, not including cooperative banks, all banks. But in respect of cooperative banks, RBI can appoint a state cooperative bank to audit or inspect your bank. In nationalized bank, there is a mandatory inspection from the RBI bank. But in cooperative bank, the state cooperative bank is undertaking the inspection of the cooperative bank within that state. But even though there are the two tiers. State cooperative bank is undertaking the audit, but if RBI feels through some market report, then RBI can also undertake direct inspection of the bank. Then section 35, RBI gives directions to cooperative bank in general and in particular in all respect of working of the bank. Now working of the bank, we can say now the KYC is compulsory. That is the RBI direction. Now central KYC is compulsory. Then nomination facility, then timings, then holidays. These all working working aspect, working hours, counter hours also, when the RBI only give direction. And for that, each and every activity, if we say that we have done this, then RBI will say issue your undertaking that you have given so, you have done so. It is just like a giving affidavit in the court. If it finds that the undertaking given by the bank that we will do this within 2 months, 3 months, 6 months, and if bank it fail, then RBI can take the action against that one. And in certain cases, if the transaction and the business of the bank go out of order, the bank under section 45 get give in even the suspend the operation of the bank. We find Nowadays we find such notices of suspension of bank licenses or holding. Holding means stop. First thing is allowing them to take through new deposit and new advances. That is the first stage. You regularize the transaction till that you don't transact new business. Whatever business you have in hand, you do it properly, correctly, and streamline that, then bank it. So that is called a suspension of business. And even in that case, if business is totally suspended, then bank can give amalgamation proposal to co-opt with the some dissolve or resolve in the another cooperative bank, and for that appointment of court receiver is the prerogative of the RBI. Then RBI has given under section 45 ZA one person only nomination is given. Normally, but even we have find some in bank, there are banks are obtaining two nomination for single account, but there should be one nomination to one account and separate format. There are only for safe custody one can nominate two-person. Otherwise, for one deposit, one one person. That you must have taken the lecture from my other Coop partners earlier also. Then various penalties for non-compliance of RBI directives or RBI rules are imposed on the banks. Then bank can RBI has the power to audit or inspect any bank, any branch, any offices if it is if, if they desire or if they find that we must undertake that activity, then they can power to do it. So, in nutshell, all the cooperative bank. Now you must have heard that one cooperative bank has declared a dividend. Then after declaring the dividend, RBI has taken the objection and some provision which was made to the NPA account. The bank RBI has said that this is the inadequate provision and asked them to increase the provision in much more than the what has been provided for. So now there is some dispute is going on that when the auditor has certified the audited, then how the RBI can take the action. But RBI has got the supreme power, and RBI has directed not to declare that dividend to the members unless and until the provision has been made as per satisfaction of the RBI. So RBI has got the huge power under the BR Act, and the all cooperative banks or all banks, not even cooperative, all nationalized and private banks has to comply with these directions and the laws. So this, in nutshell, this generally these all these provisions has to be required at the corporate offices of your brand, because they are the answerable directly. The branch managers and even a regional manager are not less concerned. They has to just follow the instruction from the head office meticulously and do it. Then ultimately the RBI instructions and directives will be automatically followed. So thank you and all the best for your promotion examination.